Hello, everyone, and welcome to the African American Man of Westchester series on bridging the Black economic divide. In this segment, we're going to cover the conundrum of financing Black businesses. When it comes to starting a business, securing capital is often one of the greatest challenges for Black entrepreneurs and business people. Less access to banking in Black communities and a history of discrimination lending practices have made it harder for Black founders to secure loans and access to capital. And once these businesses are open, unexpected disasters like the pandemic can wreak havoc on every aspect of your business's bottom line. And while many businesses struggled in 2020 due to the pandemic, Black businesses were hit even harder. According to a recent survey by the Stanford, reported in the Stanford report on the impact of COVID on small businesses between February and April of 2020, there was approximately a 41% drop in the operations of Black-owned businesses. This fallout from the pandemic left many businesses urgently seeking funding to stay afloat. But we have to remember, this has been systemic. This has been happening since Reconstruction, where businesses, Black-owned businesses, have been having major problems finding funding. And it's because of a lot of the political as well as economic issues that have taken place, whether it's implicit bias or an implicit bias. So what we're bringing to you today is a little bit of a take on in terms of how to access funding with one of my friends, Michael Minihan, who is the founding partner of BX3 Capital. Now, Michael has been, or Mike as he likes to be called, has been in the business for over 20 years as an international tax attorney and entrepreneur, and has a degree, not only as a law degree, but also in taxation. And he has worked for the IRS and several of the top 4 accounting firms. And he was once a partner in the firm of WTP Advisors, a boutique international consulting firm, and left there and retired and became the co-founder of BX3 Capital, which is a company that was created to focus on funding small and medium-sized businesses. So, Mike, I'd like to thank you for joining us, and we really appreciate your being here with us.
Thanks, Anthony. Appreciate the invite and glad to be here.
Great. Well, let's dive right into it because we don't have a lot of time.
Sure.
But the first question I'd like to ask is, what are the various types of funding options available for Black-owned businesses and all businesses in general?
Sure. So the way that I think about funding a business, I really think about it in 4 buckets, right? So the first bucket is equity, where the business owner is willing to give up some portion of the ownership of the business itself in exchange for capital. So what we see through our business often is that companies will come in looking to raise capital to expand the business, and for doing that, they're willing to give up some portion of the ownership of the business. So equity is one bucket. The other bucket is debt. So people go out and they'll borrow money, right? They don't necessarily give up an ownership stake, but they're willing to borrow money to get the capital they need to expand the business or run the business. The other 2 ways that I think about funding a business are through operations, right? So the business is generating enough operating income that you can start to sock away money, reserves, and plan for the future for expansion. And then the 4th bucket of funding that I think about for a business is something called non-dilutive capital, right? So the businesses that I think are, very smartly run are the ones who are able to tap into sources for non-dilutive capital. And when I think about non-dilutive capital, what I'm thinking about there are government grants, So there are a number of programs that are available depending on the industry in which you're operating, where the government will actually provide money that doesn't have to be paid back as long as you meet certain thresholds. So often this will apply to high-tech businesses or businesses that are government contracting. But even, I would say, over the course of the last year, there were businesses that qualified for, like, for example, the Paycheck Protection Program. If you're able to get those funds forgiven, right? So you got money from the government because you had an operating business and you had a loss of income and that sort of thing. When those funds come in, they support the business, but they don't necessarily have to be repaid as long as you meet the thresholds. So those are the kind of the four ways that I think about funding a business. And then, kind of with the, one thing that I'll add is kind of an overarching thought to keep in the back of your mind. We see a lot of companies come to us looking for funding, and they're late. They're late in that process, meaning that they're coming to us because they need money. The best time, if you think about the people who have the easiest time getting mortgages to buy a house, are the people who are the most financially secure, right? When you're most financially secure, it's easiest to get debt. It's the same thing with raising capital. The best time to raise capital is when you don't need the money. So if you have a long game in terms of the way that you're thinking about your business, if you're doing well and operations are killing it, you're starting to reserve money, you're starting to set aside, you have a vision for the future, sometimes that's the best time to raise the money, because it doesn't look, you have a lot more leverage with your potential investors because you're not desperate for them to put money in to keep things rolling along.
Thanks, Mike. It is interesting that you say that the best time to access capital is when you don't need it. And having that forethought and that foresight, it's all too often we see most entrepreneurs and most businesses are bootstrap businesses, and they really don't see how to they don't know how to access funds, and they don't even know that they should start accessing funds, looking to position themselves to access funds. They always think that they have to look at their credit rating and from D&B and other avenues. And I think that, when you're looking at the four buckets that you presented, really makes a major difference in terms of a different way of looking at it and really looking at the long term in terms of your business, in terms of growth. So let's look at it on the equity perspective, and let's look at what type of businesses are supported by, like VCs, private equity firms, angel investors, and so on and so forth.
Sure. So I think about venture and angel funding in kind of the same class. So to me, at least what I see in kind of the day-to-day is that the venture funders and angel funders are tending towards businesses that are in earlier stages than private equity. So let's do private equity first, right? So private equity, a business is already started to scale. It's got, it tends to have reliable cash flow. It's got a reliable revenue. It's got users, customers, that sort of thing, right? So it becomes a scalable thing that stands on its own, right? So the private equity group can basically take that and own that as a block without needing to necessarily worry about putting growth capital in to take it to the next level. They might do that, or they might look at, hey, here's a business that's running pretty well. I can add efficiencies, or I can combine it with something else that's in my private equity portfolio to make that company to take two companies that are doing okay and convert them into one company that's doing amazing, right? That's the private equity side. On the venture and angel side, it can be earlier stage. So venture and angel may be investing in companies that are pre-revenue. So they have great technology, great ideas. They've got the foundations of a business, but they may not be at that level yet that they're ready for private equity. They may not be at that level yet that they're ready to go out into the world and do like a dedicated Series A fundraising round. What do they look for? I would say common themes particularly across venture funding and angel funding, is the ability to scale at an accelerated pace, right? So it doesn't necessarily have to be a tech-driven business. It doesn't necessarily have to be in a particular industry. But I think from the venture or angels perspective, they are looking for an opportunity to get a much higher return on their investment than they would in a traditional type of investment. That's why they're in that investment class.
Mm-hmm.
So I think from there, as you're thinking about, hey, I'd like to go out and investigate or look into funding, using one of those methods, a venture fund or an angel fund. There are so many funds out there. A lot of them are targeted specifically by geography, by mission of the company, or by the vertical, the segment, the sector that company is in. So you can get into a fair amount of specificity on targeting angels who are interested in particular in the company that you're working on.
Right. Now let's talk about on the debt side. What have you found to be the best structure to have, or the best institutions to work with, depending on the size of the companies?
So that's a good question, right? So the stuff that we see runs the gamut between stuff that's extraordinarily high risk, where we will work with hedge funds that are looking for an outsized return because there's a super high risk involved in the business, right? So we're looking at a deal now. It's a high risk lending platform. And we've got a hedge fund that wants to put money against that platform. They are looking for a return in the range of 12 to 15% in terms of interest rate on the debt that they would put into the platform. Plus, they want an option to own a piece of the platform on the back end if it does well. So extremely high cost of capital, but again, that's driven by the level of risk that's inherent in the business. With the stuff that we see that's early stage, almost all of the debt structures that we're seeing have a convertible feature to them, right? So people are willing to put up debt financing for a business, but they want the option to convert their interest to equity on the back end if they see that the business is taking off and kind of meeting its milestones.
Interesting. So now what about on the traditional side, Mike, in terms of the banks? What are you seeing from the bank standpoint? I know that Chase has set up a fund, and
Yes.
a number of others, Citi has set up a fund. What are you seeing in terms of that? Also from, let's say, even from the smaller institutions like Community Capital Group,
Yes.
and other government programs that are available.
So the resources that are out there right now, I think are really good. I mean, bordering on outstanding in terms of the programs that are available. So we're at an interesting point where there's a fair amount of liquidity in the market and not enough stuff and not enough projects to put money towards. So we are seeing actually like funds that are sitting on the sidelines. So I talked to somebody from one of the community banks last week, and his comment, well, it was kind of an offhand comment in a conversation about something else, but he was saying they're having trouble finding deals to put money into, right? That are paying well. So there are, I think that the opportunity level now is greater than it's ever been. The other thing that I think is super helpful for the entrepreneur is that the resources that are available at the government level to point entrepreneurs to funding sources is better now than it's ever been. So even something as simple as going to like SBA, the Small Business Administration, SBA.gov, the resources that are on that website are absolutely outstanding in terms of pointing people towards programs funding sources, and even down to the lender level, right, by community. So if you're, they have, and again, within their website, it goes as far as targeting towards minority-owned businesses, women-owned businesses, disadvantaged business enterprises are also prominently featured on the SBA website. So these are resources that are specifically targeted to try and get capital into and try and develop businesses in areas and people who have been historically underserved.
Yes, in fact, I'm seeing that more and more now than ever before. And it's refreshing to really see, as I like to say, the fish chasing the boat, more or less,
Yes.
from a fishing term. And so, what are some of the issues that you see in terms of deals that you're looking at? What kind of issues that are red flags that are constant, and also in terms of those who are seeking funding, putting together their deck? What
Yes.
kind of things are you seeing there as well?
Yeah. So I would say, or the biggest thing that that we'll see is underpreparedness, right? So folks will come in thinking with a vision of how the fundraise should go, right? I've got a good idea. I just need you to connect me to that right person who's willing to write the check to get it going, right?
Mm-hmm.
I think fundamentally any investor needs to be able to do their diligence on the project and the people, right? And that goes directly to what you're saying about the deck. The deck is your calling card, right? Pretty much if I pitch you an idea, the first thing you're going to say is, hey, that sounds great. Can you send me a deck? That deck has to be perfect in so many ways. Perfect, not just in technical accuracy, but perfect in its ability to tell a story and get someone to get interested in the vision so that they keep reading, right?
Mm-hmm. Right.
So we were working on a project recently. The deck that the founder sent us was 48 pages long, and on page 2 of 48 was single space type, margin to margin, top to bottom, side to side, right? So in a 48 page deck, you know who's going to read past page 2 when the page 2 looks like that? Nobody, right? It's awful. So
Right.
I had the benefit of having a conversation with the founder prior to looking at that deck. But if I give somebody that deck without having that conversation, no one's going to look at it, right? So that's the kind of project where we take that 48 page deck, we cut it down to 18 pages, and it flips. It tells a story, right? And it's something that's story worthy, right? These guys were doing an OTT streaming platform about sports, super easy story to tell, right? They just weren't good at telling that story in that format. So deck is part one, but part two is, are your ducks in a row in terms of your legal work, your financial statements, your records, and that sort of thing, right? Have you filed all the tax returns? Because what's going to happen is if we say, you know what, this is great, I love what you're doing, the deck looks good, let's get to work, we want to make sure we can set up a data room that we can point an investor to say, look, everything is bundled up, everything is wrapped up nicely, tightly, perfectly. Not only is this a good idea, this is an investable idea, because it's really two different things. A good idea is not a business, right? An investable idea is a good idea that has a business behind it.
Right. And Mike, one of the things I love about your company is that you guys not only raise funds, provide funds, but you have a back office system that is outstanding with all of your experts. Tell us more about how that works and how firms can utilize your firm and the sources that you have,
Sure.
especially when a lot of the borrowers or people who are seeking funds may not have that team behind them.
Yes. So I'll start with the way that we approach it, and then I can walk into other ways to get it done, right? If it's not us, how to get it done with other resources that are out there. So for us, we typically start with it. I get almost all my business comes through introductions, right? It's warm leads, it's referrals and that sort of thing.
Mm-hmm.
So I'll get a referral. I got one last year for a guy who was building. It's a wearable wellness device, right? It helps people with issues around ADHD and concentration and focus issues, right? It uses neurofeedback, right? It's a contained neurofeedback monitor that forces you back into focus, right? Super interesting technology, great founder, really smart guy, terrible businessman. So when he came to us, he said, look, I need to raise capital. I want to do some marketing. I've got a couple things I need to get done and that sort of thing. We said, great. And then you get in and you lift the hood a little bit, start looking around. He was in one of these boats, right? He had taken early stage money, right? Basically angel investment early on, and spent it wisely. He'd spent it on building the technology and getting the product ready for market. What hadn't been done was investor communications and keeping people up to date. The financial statements hadn't been updated. There was a bunch of legal stuff that hadn't been taken care of, right? So he had a good idea. He wasn't yet investable. So what we did is we put a team to work with him to get all of these issues kind of tidied up and get him to the point where he was investable and ready to sit before a potential investor and go through all of those questions and have a data room that people could look at. Now, not every founder is the right fit to work with us, right? We only have so much, we're a small firm, we only have so much capacity, right? Not every idea is going to work with our network of people, right? So our investors tend to be the people who tend to invest in our stuff. We tend to do Series A and Series B rounds. So they range from, you know, let's call it $3 million up to like $25 million is about, that's kind of our sweet spot for raises that we would do. We see a lot of people come in who are looking for $500,000, $1 million, that sort of thing. And it takes the same amount of work typically to do $1 million raise. It does to do a $10 million raise. Right. And it pays a tenth of the price. So it's tough to take on those projects when you have more than, you know what I mean? There's enough to do on the other side. Sure. That said, there are great places that are available to raise that type of money. So the SEC has just relaxed the rules about crowdfunding, and there are really truly excellent crowdfunding platforms out there that will allow you now to raise up to $5 million. I think the rule just changed yesterday or March 15th, right? That will allow you to raise up to $5 million through a crowdfunding platform. The crowdfunding platforms do a couple things. One, they help you with the compliance issues surrounded with doing an equity fundraise like that. But they also do some limited advertising, and they also bring to the table a batch of vetted investors who are interested in investing in companies of this size, right? So whereas we would never, we don't have the bandwidth to try and raise, you know, a ton of investors, 100 investors at $1,000 each. These guys can do that, right? They have a technology platform that allows them to do that. So that kind of solves for one aspect of it. How do you solve for the other piece, right? The back office stuff. The beauty, I think, of what's been happening with this ecosystem around entrepreneurs and venture capital and getting businesses off the ground is that communities have established really terrific resources that are available for free or super low cost to get a lot of this stuff done. So for us living in Westchester, even like the Westchester Economic Development Group that's run by the county has a ton of resources that are available. And they run like this, they run like a mentorship program, and they give you free mentoring, free office space and that sort of thing. But in addition to that, there are literally lists of resources that are available to help with legal, accounting, all the back office stuff that kind of trips people up, tends to get expensive, right? Tends to be the kind of stuff that people need to raise money for to pay those bills. You can get a lot of this stuff actually for free or really, really super low cost. So I know our firm has done a lot of volunteer work on this side, where like the community groups will say, hey, we need, you know, can you guys provide a couple lawyers to be on our database so we can help restart, help somebody who's working through some issues. And then we just go on this list, and we get, we have like office hours, and people will call us, and it's free, right? I mean, they basically get free counsel through that stuff. In addition, the university systems have a lot of free resources that are available as well for students, alumni, and a lot of the universities will do it for the community as well. You don't necessarily have to have been a student or an alumni at the university. So, so that's another really, really good resource that people can leverage as well.
Yes, that's great. In fact, I remember 100 years ago when I was in college, that's what I did. And with the Small Business Administration, we had a Small Business Opportunity Center and out in the Midwest, and that's what we did. I worked with farmers and feed stores,
Yes.
construction firms, and other types of technology and businesses.
Yep.
And that's what we did. We wrote business plans and everything else. So that is definitely a great source in
Yes.
terms of seeking assistance as
Yes.
well. So thank you for mentioning that.
Yep.
I kind of forgot about that. Again, it was 101 years ago.
There was like through COVID, there have been a lot of programs that came out, right? So even our firm, like I think we ran a couple of different programs last year for businesses that were impacted by COVID. So our marketing team did a promotion where anyone who had a business that was going to basically relaunch, like needed like a post-COVID lift on the marketing side. We did like a free promotion where we would help them do a press release. We would help them put some content out in the marketplace for free, and like donated our time and some like Newswire resources for that. We did a promotion last year on accounting and tax services for businesses that were impacted by COVID, but we're not the only ones. There's a lot of businesses out there that really not just want to give back, but are looking for opportunities to give back.
Absolutely. And at the end of the day, the way we all grow as a community, as a country, is to make sure that everyone participates, within the economic engine, so that we all can get back to work again, and so that we can generate revenue, so that we can come out of this this pandemic stronger and better than ever. So, and I do commend you, Mike, and the things that you guys are doing. Are there any other things that you can suggest? Any other best practices that you feel that people can employ in order to grow their business and access capital? We got some government programs like the IDA.
Yes.
We have the various counties have their economic development offices. But is there anything else that you can suggest that people can start looking in order to give their business a shot in the arm?
Yes. So I think you can never discount the value of networking, right? So, and that networking now, there's so much virtual it's hard to network the old style way, right? You and I would go grab breakfast and talk and that sort of thing. Harder to do that now, right? So virtual networking is more challenging. However, you can cast a pretty broad net, right? So we use LinkedIn networking a lot, but part of that too, the way to get successful with that is connecting with groups where you have some sort of connection, right? Can be community, can be university, it can be if you're working in a particular like business, like a trade association. I've done a lot of networking through the Business Council of Westchester, and they have been extraordinarily helpful to us as we were growing. They made, like it was one of those things where you have an ambassador at the Business Council, and they will have a meeting with you and say, who do you want to meet? Who do you want to talk to? Who's interesting for you? How can we help? How can we make connections?
Right.
So for people who are starting out, you can get, I'm pretty sure you can get like highly discounted memberships. And my experience has been that the folks who I've met through the Business Council, same sort of thing. People want to be helpful. They want to make connections. They want to help businesses grow. So I think that's a fantastic resource to tap into.
Yes, absolutely.
I do think for businesses that are starting out, I think to look at the incubator space, The accelerator programs, I think, are always pretty helpful in terms of getting free resources, but also helping to make those connections. Because again, I think at the end of the day, raising capital is very difficult. Even like in the best of circumstances, if
Right,
you're
sure.
able to network and help make connections, it goes a tremendously long way towards getting you to the next level.
Absolutely. And at the end of the day, people want to lend and to partner with those people they feel very comfortable with.
Yes.
And so and at the end of the day, it's all about being in the room.
Yes.
90% of any deal is about being in the room. So when you find the room, you go into the room, people are curious about who you are, what
Yes.
you do, and what you have to offer and what you can bring to the table. And they can see whether they can bring something to the table. And that's how you create that win-win.
Yep. And I
And at
follow
the
up
end,
like crazy, right? So
exactly,
you meet someone and
exactly,
you gotta stick with it, right? If
right,
send somebody an email, say thanks, good to meet you. It's always about setting another touch point, right? Thanks, it was good to
right,
meet you. Let's catch up next week. I'm working on this. Or hey, something
right,
happened that I wanted to share with you. Or hey, we got a mention in the newspaper. Just wanted to share this
right.
link with you. And I think that's the kind of thing that helps people remember who you are, what you're doing, and helps them to think of you when those opportunities come up that they can share with you.
Absolutely. Absolutely. Yes. And you mentioned the Business Council of Westchester and the Westchester County Association
Yes.
and all the other business and trade organizations that are out there. I mean, at the end of the day, that's where you want to be. That's the room that you want to be. That's how you generate business, but it's also how you generate funding
Yes.
to grow your business to the next level and looking at ways in which you can partner. You may not be large enough to take on a major project, but you can possibly come in as a GC,
Yes.
um, or as a subcontractor or however the case might be. So
Yes.
that's how you find out what's going on. Well, Mike, I want to thank you very much for all the great resources that you provided. I think that our audience will really have a lot to chew on in terms of looking at how do they not only access capital but also access business so that they can grow their businesses to the next level. And so again, I would like to thank you very much. The members of the AAMW, African American Men of Westchester, would like to thank you. And are there any other parting words that you would like to share with the group?
No, just like say thanks. Thanks for inviting me out. And obviously, we've been friends for a long time, and Bernie, we're friends for a long time as well. So anything I can do to help you guys, please just reach out.
My friend, thank you very much. We really appreciate you and your family. And we hope that you and your guys all stay well.
Thank you. You too.